Hi, and welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So I spend a lot of time in the lessons going over MACD and ADX, especially how to use them in multiple time frames. But I wanted to take a break this week and go through candlesticks and the key candlestick patterns that I look for, the specific bars that I think have a lot of meaning, and where they show up, it has even more meaning. So let's go ahead and look at this agenda. So I've got this 5 candlesticks that I'm on the lookout for, and we want to keep an eye out for these, and the location of these is actually one of the most important things. And what I like to do actually with candlesticks is look at them on a longer term time frame, and then they can have a pretty significant influence on how I'm looking at the smaller time frame. So we'll go through that, and then we'll go through the stock requests that came through. So let's go ahead and get into this lesson now. Okay, so I'm going to start out and just use this MongoDB weekly chart. I want to give you a quick reference to the 5 candlesticks that I'm on the lookout for. So for anyone who's taken my course or might have an interest in it, I start out the first section is all the lessons are on these candlesticks and how I use them in relation. There's 4 things I'm looking for on each individual bar. I'm only going to talk about 2 of them today, but we want to look at, first of all, these 5 bars. Number 1 is the bottoming tail, the topping tail, a wide range red, a wide range green, and then a narrow range indecision bar. And I think if you know these 5 bars, I think it can be really helpful at turning points. They can be really helpful in terms of taking profits. I have used wide range greens and wide range reds as phenomenal exit points on trades that I've done, longs and shorts. You just have to understand where their location is and how they're taking place. So let's just start with the bottoming tails. I got 2 over here on the left, and essentially what that is where we leave sellers behind. Okay, we get a move to the downside, and we push off the low to the point where we leave a tail, a decent sized tail. Now, I would say the minimum requirement is we need to have the open and close above the midpoint of the day. If we get that, midpoint or higher. All right. But I want it to be a decent sized bar. I don't want it to necessarily be a narrow range bar. If it's a narrow range bar and we have that, then I would just call it a narrow range indecision bar. All right. But in this case, we have a fairly good sized bar that happens after a decline. And we leave people behind, meaning we had sellers down there. And by the end of the day, they kind of realized, oops, I think I exited at the wrong point because we've come off this low. Now, where it is in relation to the 18 is incredibly important. And in this case, we had stretched away. We had 1, 2, 3 down bars with a pretty good sized red bar, and then we get the tail. That is a lot more important. Now that's followed by a green bar to the upside that takes us back up to the moving averages. And then if you notice, we get another drop with several red bars in a row. We get a bottoming tail. We get another close to being a bottoming tail, although I don't think that made it above the midpoint of the day. And then we get a clear bottoming tail. Now it's not wide range, but it's closing. Both the open and the close are right at the high of the day. So think about what happened that day. We opened up. We've been going down, down, down. We open up. We push down. We go to a new low for the week, or in this case, the month. And then we push all the way back up and close near the high. We open up and close right near the high after a big drop. That's telling me this decline is getting very late. We're getting stretched away. We've got 3 bars in a row that have left some people behind. We should be on the lookout for a rally. Now, you want to use this in relation to your daily chart. So if you go down on a daily or an hourly and you want to play this for a rally up to this 18, these are going to be incredibly helpful in helping with your timing and saying, okay, I've got this bottoming bar. Let me go down to the daily chart or the hourly chart and see if I can find a signal that can take me back up towards this moving average. Now, when it comes to these wide range red and wide range green, in a lot of my videos, I basically call them monster green, monster red. What we want to be looking at is where they're taking place. because they're giving us two different pieces of information. If it happens after a rally, so if we get a red bar after a rally and a little consolidation right at the declining 40, where the 18 and the 40 are both declining, and we get a monster red crossing back through the 18, to me, that's the start of a new move to the downside, right? We're getting, and essentially what I'm looking for on these wide range reds is we want to be closing, we want to be opening near the high of the day. It doesn't have to be right at the high, but it needs to be pretty close. And then we want it to close near the low of the day. It's basically pure red with small tails, if no, or sometimes no tails whatsoever. So it's the exact opposite of the bottoming tail or the topping tail. So we want to have that, and it's wide range, and it's happening where it's coming out of a consolidation. That's telling you expect more follow through after that. Now, the opposite here is a wide range green. If you notice, it happened after about 7 or 8 green bars to the upside. So that's more of a sign that it's getting late in the move, and it's probably not a bad spot to be thinking about taking profits. All right. And if you think about it, it had a little bit of follow through after that, but that was the lion's share of the run after this big wide range bar. That was pretty much it for quite a while. All right. Now, look at this narrow range indecision bar. So this is where, in most cases, not most, but in a lot of cases, it'll be an inside bar as well. It'll be inside the range of the prior, in this case, the prior week. But we want to look at it in relation to what's been taking place. So if you notice what happened here, we had an A, B, C decline, right? We get a move to the downside, we rally up, and we make a new low. We have an A, B, C, but we still have a rising 40 underneath. We have a healthy looking MACD that's in a corrective pattern, working its way back down to zero. And we have the buyers in command here. The green stayed above red throughout this whole consolidation, this whole ABC. We didn't get the sellers to overtake or show any real strength. So we know that we've got the buyers in control. And then this shows up, this narrow range bar. Here's why I think it's important. If we look at the way this played out, we came down and we rallied up. We got a little mini topping tail right underneath the 18. Gives us a sign that maybe there was some selling. Well, we undercut this low. We took out that low, and there was zero follow through from that. So if we're going to get a breakdown off of a topping tail where we fail at a declining 18, this should have downside follow through. But instead, we get like a couple of indecision bars, one that went down and went to a new low, not quite narrow range. And then we get a very narrow range bar that follows that, that's inside. So if you think about what's taking place here, we're showing that there's really no sellers. And then this narrow range is saying we have total indecision at this point. Well, I'm looking at this and saying, what is the highest probability? If we have narrow range, a lot of times what follows narrow range is expansion. All right. So I've got to make a decision. What is the highest probability based on everything that I'm seeing? Well, to me, the probabilities are it wants to work to the upside in this case. So we want to use our analytical skills around these bars as well, but just keep an eye out for when something is stretched away from the 18, we get a topping tail. That's pretty relevant to me. How far away are you from the 18 when you get these signals? If you get a bottoming tail or a narrow range bar when you're stretched away to the downside, you should be thinking that we're going to revert back towards the moving average. If we get a wide range bar, either the downside or the upside where we're igniting, where we're kicking a move off, you know that's probably the start of a move. And then finally, when we get a move to the upside that's stretched away from the 18 after an extended run, we want to be looking at that as a potential profit-taking opportunity. In either direction, sometimes that'll happen on the downside as well. All right, let's go ahead and move on to the individual symbols that came through. If you're enjoying the content, hit that like button and also subscribe. So my research can be found at rabilstockresearch.com. In addition to that, I also have a book that I'm offering at a discount right now, and it's probably a good way to get started if you want to learn more about my methodology. You can go to rabilstockresearch.com/book to get more information. Okay, so we're going to continue to focus in on the QQQ, which is the strong index, and then the IWM, which is the weaker one. And for anyone interested, you can go to my YouTube channel on Friday morning. I do an update on the S&P. All right, let's look at this QQQ to start out, and let's stick with our candlestick thought process. which is, big green bar rallying off the rising 40 week. We still had a lot of strong momentum. The MACD had worked off a lot of the overbought condition, and then we get this big green bar to go. If you notice the way this is played out, though, you see how the bars have gotten smaller. And then last week, there was actually a narrow range bar last week. And then this week we've got a little tiny topping tail that's another narrow range bar. So we've kind of got like back-to-back narrow range bars taking place. Now, the momentum is really good here, and we're at a time of the year where I think we got to be very careful about getting too bearish, I think. Now, we flip over into December tomorrow. It's very possible we could get a little bit of a check back or a pullback or a pause just based on how far this is run. We can start to see the lack of upside progress in these last couple moves that's taken place. But look at the ADX on the daily chart. This is very strong. Now we're losing a little bit of DI. DI is not making a new high with price here. So it's very possible we're looking for some kind of a little retracement or pullback. But again, I don't think I would be looking for anything crazy. There is a lot of support underneath, probably right around the 18-day. Now, I did want to focus in on the hourly real quick, because look at the way this played out. We had this big run to the upside to start off the move with massive momentum on an ADX basis, right? And then we pulled back and then made another new move with good momentum characteristics, but not quite as strong. And then as we've pushed higher and higher, you see how the ADX is not really confirming to the point here where it didn't really move up at all on this last gap up. So this is a sign that we should be on the lookout for a reversal. Now, a reversal in this case, because the ADX is so strong on the daily chart, might just be a consolidation pattern. A reversal of the uptrend could just be going sideways. Doesn't necessarily mean it's got to drop a lot. But so we always want to kind of lean on what's taking place on the bigger time frames. And with that, I think I would sort of question whether I'd even want to short this. It is a pretty nice exhaustion signal, but I don't know that I'd really want to play that, just simply because I don't know if there's that much room. Now, we should be open to the possibility that this could pull back some, but I don't think I'd be looking. Just again, we're into December. The bias is up. We had a chance of breaking this thing down and couldn't do it down 4, 5, 6 weeks ago. And I think now it probably has, for me, I would be thinking there should be a bias probably into the end of the year. Now, we could start off December with a little bit of a pause after a big month into November. But again, I don't know that I'd be looking for a big reversal. All right, let's look at the IWM, which is the other end of the spectrum. We haven't really gotten, not only are we not breaking out, we haven't been able to get through the 18 and the 40 and this 180 level, which has kind of been the balance point of this whole move. You see how this is like right in the middle of the range. So we've got the upper end of the range and the lower end of the range. And this is kind of like right in the middle where we keep flipping up and down through. So we're at this critical point. I think if we can push through that, then we have a shot of making a move up towards 200. And I think that would be an encouraging sign for the market. What I'm going to be watching as that is taking place, if it does, if we can get this through this 180 level in earnest, we could be pushing up towards 200. If we push up towards 200, I want to see if we see any improvement in the relative performance, because this is truly the fly in the ointment for the market right now. I just don't see the market doing anything massively significant to the upside and break it out and following through to the upside without any improvement in the IWM on a relative basis. So key in on this 180 level, see if we can get some strength breaking through that. All right, I do want to look at GLD again. I know we talked about it last week, but we have to have some respect for what's taking place. You see how this is cupping around? And my suggestion to you is to go look at a stock like HMY, Harmony, or AGI. Those two stocks, they're in the small, they're smaller cap stocks. They're not with the big guys, but I would tell you that the patterns there are really significant. They fall more in line with what I'm seeing in this monthly, weekly gold setup, GLD setup. So I think this could be played. I think there's some pretty interesting patterns there. We want to look for any kind of little weakness to potentially participate there. So, keep your eyes out on these. Now, some of the big names are improving, but, if we look at what's taken place in this, we had a pinch play, successful pinch play on the monthly chart on the MACD. And then we just completed a bullish pinch play on the weekly as well. Notice how green DI is showing improvement on the weekly chart. So good signs overall. And the fact that this held this key support area, I think is pretty interesting. All right, let's look at the Coco first request here. So let's just look at our bars, right? Look at the monthly bars, and this sort of tells the tale. And literally, pardon the pun, right? We've got tails and we've got tails, all right? So when I go down and you'll see when I go down to the smaller time frames, I do want to see if what I'm seeing on those time frames is confirmed by what I'm seeing here. And what I'm thinking, looking at this, is that there's a lot of support and there's a lot of resistance. There's not a lot of, I'm expecting more consolidation right now. And when we go and we look at what's taken place on the weekly chart, we had this massive move to the upside with really good momentum, good volume, confirmed by MACD. But look at what's taken place since then. We had this big topping tail here. And then we did get a really nice green bar, but then we've got another topping tail. Now, what are the problem with these topping tails is they're giving you a misconception. This is the one problem with the ADX. If you don't know how it's created, how it's calculated, you could be thinking that this is actually really, really bullish action, when in reality, these big spikes are helping the green DI, but they're negative. This is negative price action, right? I mean, we're giving it all back. We're going up and we're giving it all back. We're leaving people behind to the upside. So got to be real careful about reading ADX. This is why I like to look at more than one indicator sometimes. Got to focus on volume. Got to look at a price. And what I'm seeing is we've got resistance up here around 30 and we've got support down here, just around 25, just under 25. I think this wants to stay contained. Now, if we can come down and hold the 18-week and then break out through 30, I have a lot more interest. But right now, I just don't like those tails up there. I think there's a little bit too much resistance. I don't know that I'd want to play this or be looking to play a pullback in this just based on the way this is set up so far. Okay, let's look at a comparison to Monster. This has a longer term chart to it, and I do like the fact that this bounced off support. But again, let's lean on our candles. Look at what this is doing. We've got a big bottoming tail on the monthly here, and now we've got a big topping tail. Today's the last day of the month, right? So we know that this is about how this is going to finish off the month. We've got a big tail up here, all right? And we've got a lot of support underneath. So this, to me, is support. This is resistance. You see how we got these two back-to-back bottoming tails, and that was basically kind of the move to start turning things back to the upside. And then we actually got kind of a narrow range bar here, which suggested maybe we should be looking for a turn. So keep looking at these. But now what this is telling me is we're kind of range bound. We've got support underneath and resistance overhead. And I don't have a lot of momentum in place right now. A decent move to the upside, but then we got counteracting momentum to this way, to the downside. So I think, again, when I look at it on this time frame, I'm thinking more of a trading range forming, at least for the next month or two. Nothing all that exciting on this one right now. All right, let's look at the Snowflake. Now, we had earnings and it's gapping up. Now, we do want to recognize the fact, let's go straight to the daily. You see how this is playing out? It's sort of gapped up into resistance. This is a key level up here, 190-200, all right? And you see how this is playing out right now? So what we're going to need is we're going to need a little bit more proof. We've got really nice green DI, obviously based on the gap up, and that's helping this. And they got pretty good volume right now, improving momentum overall. But we're going to need to see this prove itself and kind of turn up like that. That's really how I'd like to play this. And if we look at the weekly chart, it's a nice sideways basing formation. But if we tried to break out right now, we'd be overbought. So what I want to see is actually, I'd love to see this finish up the day a little bit better than this. And then, maybe even the week a little bit better than this. And then maybe pull back and then try and break out that way. I think if it tried to break out through 200, 200 is the level I think that I'd be watching. If we got through 200 and we were overbought or we were basically straight up, then I would wait for a pullback. All right. If it pulls back first and consolidates, then you could actually buy the breakout. I don't know that I want to pre-guess this. I do like the low ADX condition that's in place. I think this is improving, but just based on the way this is reacting to earnings right now, we're going to have to kind of take a watch and see attitude, I think, in the near term. All right, let's look at this. This is a reversion question. A reversion back towards the 18, right? We got stretched away to the downside. We are losing a little bit of momentum. If you look at the red DI, the sellers are losing some strength. Now, there's not a lot of strength in the buyers, but we do have a little bit of room to the 18 week. Now, what bothers me is that I don't have any of my bars in there. Now, you got a little indecision bar here, but I would rather see that here. I mean, you did have a big sized red bar that followed up with a gap down and reversal. So, I mean, I guess there's a little bit of a sign there, just nothing significant that's suggesting that we should definitely rally up on that time frame. But on the daily chart, we do have a 40 to 18 bounce. Now, I do want to clarify something, though. I think a lot of people look at this and say, you know, this is divergence. This keeps making higher bottoms while this is turning around. This is, you know, a lot of people would look at this as bullish, but I'm actually looking at the other way. Do you see how this is making lower highs? This is making lower highs while this is making higher highs. This is reverse divergence too. So I would be very, very concerned as this approaches the zero line on the MACD. Don't fall in love with this. If you want to take this for a quick trade, you could do that. You probably have to do it off the hourly time frame. We're getting a little pullback. You could trade it for a little bit of a swing here. But again, play it really tight to the vest because of what's going on in the MACD on the daily chart. All right, let's look at the Keycorp here. I think what's important about this is that we're coming into this major support zone. This is happening in a lot of the regional banks. Huge, huge support. The problem I've got is the momentum condition that's in place. Normally, you don't go from a strong bear trend to a strong bull trend. You normally go sideways for a period. And I think that's what's going to happen here. That doesn't mean we can't rally up to 15, 16, 17, something like that after the depressing action this has had. I mean, it's probably due. And this one doesn't excite me as much as some of the others in the regional banks. It looks like there's a few others that want to rally up. This is trading pretty well on the daily. Kind of just missed a little entry there on this pullback towards 12. So I don't know. I mean, I don't think I would be overly excited about this with the declining 18-month overhead. You'd have to be pretty nimble to play this. Now, let's look at RMD. So the same problem here. We've got this violent break to the downside, but this one doesn't have this massive support. It's got some support, but it doesn't have this massive support area underneath. One thing it does have going for it is the volume looks pretty climatic. So I don't think there's a massive amount of downside left. The question is, how long does it get going? How long does it take to get going to the upside, right? I mean, if we're going to play this, we want it to go up, not just not go down. So I would just give this a little bit more time. I think it's going to need, it might have a little bit of a trading move to the upside, but I bet it comes back. Let the 18 week at least start to cup around. But you're going to have some problems as you start to approach 200 is where resistance really is going to get thick. Okay, let's look at Netflix. So we've had on a monthly chart this massive red bar. You see this huge red bar came after a big decline? Do you see that? So this was more of like the igniting red bar. And then we got big continuation to the downside. And then you get a huge move. And then you get this massive red bar to the downside after a run to the downside. This is where you should be looking for exit. Now, normally the way I look at this, and I did this on 2-minute charts when I was intraday trading all the time. If I got a big bar like this, the next bar, you usually get a little bit of overthrow of that low, of the prior bar's low. I would take advantage of that. The moment it came back up through, I would be getting out. So if I were short this and this were coming back up through that level, I'd be covering. So that's kind of, I just want to point that out because it was just a great example. Now we've made this nice move to the upside and pulled back to the 18 months, which is now rising. Look at the improvement here. Look at the improvement in red DI. Overall, this pattern is starting to look a lot more attractive. The other thing I like about it, if you put up the fib grid, we're getting through the 50% retracement, testing it, and then turning back up. So I view that as kind of an encouraging sign. Now, on a short-term basis, similar to the QQQ, we've made a pretty big run to the upside. We've actually kind of broken out here. It just looks like it ought to pull back. Now, what I've been telling my subscribers is, look, don't have to wait for the market to pull back. Watch for individual stocks to pull back. If Apple and Amazon and Google keep pushing higher, the market's going to keep treading higher. This could pull back in the meantime. Take advantage of the individual pullbacks that you're offered and use these individual. This needs a pullback. I wouldn't chase it, but if you got to pull back a little bit closer to the 18-week, I think I would want to take advantage of that. Okay, well, we've run out of time. Thanks for watching. If you have any stock requests, send them to stocktalk@stockcharts.com. And also, if you have an interest in learning more about MACD and ADX and multiple timeframes, check out my YouTube channel called Invest Like a Pro. Have a great week, and we'll see you next time.